You're listening to the RE Social Podcast with your hosts, Andrew and Vince from AnVi Invest. For more information, go to AnViInvest.com.
What's up, everybody? Welcome to another episode of RE Social. We have a very special insurance specialist guest. Hopefully that's timely when we release this. LA fires and all that are just kind of, I don't know, are they still burning? Anyways, Welcome our amazing guest, Skylar Romines. Thanks for being here and dealing with our unique setup. Right now, we are in the middle of rehab on 2 of our Airbnbs. And since Vince is just on all the caffeine and cold plunging, he's like, you know what? Let's just gut and rehab our podcast room as well. But that's been a long time coming. I'm really excited. So you guys are kind of seeing and hearing our setup, probably just a one-off. But I kind of like it. We got space. We got room. I can do jumping jacks and, what you guys won't even notice. It's going to be great.
Yeah, it'll be great.
Yeah, it's not bad. The angles look good.
Yeah, that's actually our living room.
Oh, there you go. It works.
The big table has been useful. Hey, Sky, so for people who don't know what you do, can you tell the listeners what you do in like 60 seconds?
Sure. So commercial insurance, which I know is everyone's favorite thing to talk about these days, right? I spent 17 years on the broker side, so commercial insurance broker, working with commercial real estate owners and developers. Last year, I left that career and launched my firm, which is ATW Advisors. We are a third-party insurance consulting firm. So clientele base is the same, commercial real estate owners and developers, and we essentially do third-party consulting. So we represent the owners through the process of risk management and insurance procurement.
That's awesome. So you pretty much get in touch with somebody who's a commercial property investor, buyer, and then consult with them on which package or which option in terms of their insurance needs would be proper.
Yeah, I mean, anything from kind of ground up what they can do in terms of updates to the properties that are going to open them up to more insurance options. Insurance is the fastest growing expense line item in commercial real estate over the past couple of years. So one of the best ways to increase your NOI is to reduce those operating expenses. And with insurance kind of going through the roof for people who aren't being proactive about their insurance procurement, which historically a lot of people weren't, and you didn't really need to be, right? Because when we were in a softer insurance market, you could plug in your 3 or 5% increase or whatever it was every year and just kind of go about your core business. But over the last few years, when people started seeing those 20, 30, 50+% increases, it's gotten a lot more attention now. And so now, building a really strong insurance team and being proactive about your insurance is one of the best ways that you can reduce those operating expenses and improve your NOI.
And what do you think has caused the insurance to go up or like much faster than the cost of inflation?
Yeah, so it's several things, right, that kind of all hit around the same time that led to that real crunch in terms of insurance. And I'm talking now specifically about the property insurance market, right? So you mentioned inflation. That was one thing, which increased replacement cost valuations. And, your insurance policy, basically 2 things go into how your premium is developed at a high level. It's your exposures and your rate. So your exposure times your rate is your premium, right? Well, exposure divided by 100 times your rate. So when that replacement cost goes up, your premium automatically goes up in relation to that replacement cost, even if your rate stays the same. Now, all of that happened with the supply chain issues, inflation, and everything else. Those replacement costs are going up. At the same time, we were entering into a hard market in terms of the insurance cycle. So much like the housing market, insurance is cyclical. We go into hard markets and we go into soft markets. During the soft markets, you see lower rates, you see more capacity, more carriers are willing to write insurance. In the hard market, you see carriers have had higher loss ratios. They're starting to pull out. You have less capacity. And so the rates go up as a result, right? So those 2 things kind of hit at the same time, which created that perfect storm environment where we were in a harder insurance market already. Higher rates, less capacity available, carriers pulling out, especially in the real estate space and especially in certain asset classes, multifamily being hit the hardest. And then certain states, certain areas of California that are wildfire exposed. Everybody's heard about Florida's insurance crisis, right? With the hurricanes and everything else. Coastal Texas, same thing as Florida. So yeah, those are really the 2 major levers that cause the insurance to go up around the same time. Less competition because a lot of carriers stopped writing real estate entirely, and the ones who are reduced their capacity. So let's say you had, carrier A, and in 2020, they were writing $100 million in new premium for multifamily a year. That was their target, right? Maybe in 2021, they cut that in half. So they said, we'll write 50 million new premium this year. Maybe 2022, they cut that in half again. So now it's 25 million. And as it and then some carriers just said completely, we're pulling out. We're non-renewing all of our policies. We're not writing this asset class anymore at all. Even if it's best in class operators, even if your loss ratios are low, we're just pulling out of this. It's outside of our underwriting guidelines now. So as that capacity shrinks, there's less and less insurance available in the market. When there's less players available in the market, rates go up because they can charge more and it's more competitive to get those policies.
Wow. There's a lot to unpack there.
Yeah, I wanted to ask you, you mentioned one of the things you mentioned was the insurance people are pulling out of certain markets. What was the reason that they pulled out in mass in California?
Yeah, so in California, there are a few things. The one major thing is going to be where you're located. So kind of backpedaling a little bit, right? Carriers have access to more information than they ever have. So I started my career in 2008 was when I got licensed as a broker. And even then, carriers were starting to have access to a lot of data. And it certainly was different than, the decades prior when everything was kind of done manually. You had to kind of go out and do an inspection if you wanted to know what the property looked like. Now, if you think about all the tools that carriers have, so they have, real-time satellite imaging. They can look at your property at any time. They can fly a drone over it, which is what we're hearing a lot about for homeowners insurance carriers in California now. And then they have access to a lot of just data and analytics, right? So they'll pull, type in the property address and pull all of these maps up and it will show them all these different layers. Here's your wind risk. Here's your hail risk. Here's your wildfire risk. Whatever the case may be, your crime score is a big one now that carriers are looking at on the liability side. So if any of those ratings come back as being in a high risk area, then the underwriter is going to pull that and look at it more closely. And so they're going to run your whole portfolio through those things. And then that's another thing. In the soft market cycle, underwriting is not looking at everything as closely, right? In the hard market cycle, when it gets more competitive to get those policies and rates are going up, carriers are looking at all of that data much more closely. So before, where they may not have pulled all of those reports every year, or maybe they pull them every 3 or 4 years, or maybe they would only, do a spot check and pull certain locations out of your portfolio and check them. Now they've really started to put more underwriting scrutiny on where they're looking at every location every year, pulling all the reports. And what we've seen is, especially in California, the wildfire scores are changing. And it really started back with the Woolsey fire. I believe that was 2017 or 2018, where it jumped over the freeway, right? And we had never really seen that before. And all of the wildfire modeling prior to that, a freeway or something like that would be considered a firewall. So it was essentially stopping from, in one risk event, you weren't subject to losing properties on both sides of the freeway. That all changed after that fire. And now we've seen several more fires that have been even more, intense and kind of done similar things, had similar patterns. So the modeling is always changing to reflect what we're seeing in real time, as well as, what they expect in the future. So that's one reason that a lot of carriers have pulled out or at least reduced their capacity in California, is they just can't get enough rate online to make sense with the increased risk.
So what advice would you give the listeners who are looking to make an investment purchase in the state? Obviously, consult Skylar. And then what?
Yeah, call us or call your broker, right? I always tell everyone, and I said the same thing when I was on the broker side. If you're working with a good broker who's really part of your team, you can't call them enough. The worst thing you can do is get under contract on a property, not talk to your insurance team, and then at the last minute find out that you can't insure the property or you can't insure it at a number that's going to make it profitable for you, right? So I always tell people, if you're building, send the APN number. If you're building ground up, you don't have an address yet. If you're looking at acquiring a property, that's already fixed and operational, go ahead and send that address in. Have your broker pull some of those reports up front so that at the very least, hey, maybe it's in a 60 wildfire zone, which is, on the higher end, but not really high. That's probably not going to impact you that much. You should be able to get coverage. But if you ask your broker, hey, pull up this address and it's in a 90 wildfire zone or a 90 crime score zone, already that you're going to have a major problem with insurance, right? So you may be able to get insurance, but it could cost 2 or 3 times as much as what you budgeted. So knowing that going in kind of helps you to understand what the risk is from an insurance perspective of purchasing that property.
And at what phase of due diligence would you recommend that? I know pre, us kind of chatting, we kind of asked you about like what you're doing. I think you said you had some homes in the Dallas-Fort Worth area. So you might have some input on that beyond just what you do.
Yeah, as soon as you can. I mean, I always tell people, as soon as you know an address, as soon as you're even looking at it, there's no harm in sending it into your insurance team and having them pull some reports back, right? It doesn't take very long. It's not that difficult. They have access to the information, so you might as well be utilizing it versus you can never be too early, but you can definitely be too late.
Yeah, it's that's very interesting that you mentioned that because we started investing around 2018. Is that around the time that you had properties too? 2018, right?
Out in DFW, yeah.
Yeah. So we started by at that point. I don't know if you did this. I never one time called my insurance agent before I was in contract. But now, we bought a couple of weeks back. We closed on a property outside Nashville. And now, when every time I check, be like, "Hey, can you cover it? What's going on? Like, is this it's a new build? Is it cheaper?" And then they if they say something insane like, "Oh, it's $20,000," I'm not doing the deal. It's kind of weird that it's become like this. It didn't used to be like this.
What did it used to be? Because he does a lot of the purchasing of the property due diligence. It's like more his thing, and I'm more of like the management. So I'm a little removed from that. So what was it, and what is it now? What's that process like?
Yeah, so I'll give you this quick example. I want Skylar's input on this to see what she thinks. So we bought this property in Redlands, Mentone, which is San Bernardino County. I don't know if you know. Some of them are close to like forests and stuff, right? Or the wild stuff. So one of the properties they called and canceled. They just said, "No, we're not going to renew. Goodbye." So it used to be, I think the insurance was $1,600. It jumped to $4,000. And then the $4,000 is California Fair Plan. So California said, "Hey, you cannot increase the this is how stupid California is. I hope California is listening." They said, "Hey, you cannot increase the insurance prices," but they're like, "But you guys are printing money and costs are gone up." They're like, "No, we don't care." They're like, "Cool story. We're out." So most of the companies just left, and California said, "Hey, remember how we said we don't want to increase the insurance? Yeah, it's up by 250% for you." Who's doing it? California is doing it. So my insurance right now is $4,000. It used to be $1,600.
And how did California do that, as you said?
Because they kicked out everybody else who wanted to do insurance here because they said they price fixed it, basically. It's like rent control, like insurance control.
Yeah, so actually this Friday, I'm doing an emergency webinar with the California Mortgage Association. I can send you guys a link if you want to sit in on it. We've got a few other people on the panel as well, but that's exactly kind of what we're talking about, right? I spoke on a panel last September as well for the California, Real Estate Finance Conference. And it was about the same thing, California's insurance crisis. And unfortunately, these wildfires happened and it was kind of worst case scenario, but we've seen this coming for some time. California has had regulation on the books that is kind of exceedingly difficult for carriers to get their rate filings approved. So just to I don't want to get so far into the insurance weeds that everybody's eyes start glossing over, right? But at a high level, you have admitted carriers and non-admitted carriers. And admitted carriers have to get their rates and their coverage approved by the state. So if they want to increase their rate filings, they have to file that with the insurance commissioner's office, and that needs to get approved before they can start charging those new rates. So what we saw, over the last really 2 years is when the crunch really started coming in and we actually saw people pull out. Now the signs have been there for several years ahead of that, right? Where carriers were filing their rate increases and they weren't getting approved by the commissioner's office and they were just kind of sitting on those. So for several years, rate filings weren't getting approved. Where it really kind of fell apart and got attention from a lot of people, even outside of the insurance community, was when State Farm stopped writing new business in California, right? And then Allstate quickly pulled out after them. State Farm was the largest writer of property insurance in California for residential. So that was a massive hit. Then the regulators, the insurance commissioner, their office, and the regulators started working with the carriers again and making kind of negotiations on, hey, what can we do to get you back and writing coverage in the state again, right? Because then it became a dire situation, to your point, where Fair Plan was always intended to be the insurer of last resort. It's kind of a quasi-governmental insurance body that has a certain amount of coverage limit. The max you can get on a residential property is $3 million. The max you can get on a commercial property is $20 million per building, $100 million per location. So for example, this Pacific Palisades fire that just happened, a lot of those homes are worth more than $3 million, and they were with Fair Plan. So unless those people bought excess limits through another carrier, which many don't, because they don't think they're going to have a total loss, they'll be underinsured. The other question is, Pacific Palisades was the number 5 largest Fair Plan exposed city in the state. And they had about $6 billion in exposure with the Fair Plan. And so we don't know, Fair Plan has about $3.5 billion of reinsurance that we're aware of. Nobody has seen a loss event like this before, where potentially the Fair Plan will run through all of the money that they have paying out losses. And if that happens, we really don't know what the solution for that is. I would imagine there will be new regulation and we'll get some type of emergency support for those people to pay them out their limits. But, Fair Plan was intended to be the insurer of last resort. Over the last few years, the number of Fair Plan policies went from about 200,000 to 450,000 between about 2019, 2020, and 2024. So more than doubled in that 4-year time period as the carriers continue to pull out of the state. So Fair Plan really had more exposure on the books than they were ever intended to. And unfortunately, because that was the insurer of last resort and it is backed by the state, that's kind of everybody's last opportunity to get insurance coverage in some areas.
So what happens if your house is worth $4 million?
Well, right. So ideally, if your house is worth $4 million and if you don't want to self-insure, then what you would do is go out and try to get excess limits above the Fair Plan limit, which is possible. And a lot of carriers will come in on an excess basis, even if they won't come in on a primary basis, right? Because the risk is much lower if you're coming in and writing above a $3 million attachment point versus, if you're coming in first dollar or above a deductible, which might be, 10 or 15,000. The other thing to consider there is if your house is worth $4 million, you also have additional living expenses that you need to cover. You have contents that you need to cover. Some of these people, I hate to say it, but I can't imagine that any of those homes in the Palisades get rebuilt in under 2 or 3 years. And I think that's being really, really aggressive. Those additional living expenses can be significant if you're renting for that entire period. So, $3 million goes by pretty quick.
Yeah, I can't wait for all the guys who voted for all the California Coastal Commission garbage people and all those morons who just write all the laws and take like 2 years to get an approval. They're all going to be homeless. There's no chance. There is no chance they'll get any approval. However, I did see Gavin sign a bill saying that he's going to fast track all of the permits. Hopefully it does work.
Permits for what?
He's going to fast track all the permits to get the
to
buildings.
rebuild.
Yeah, because they won't approve it.
Yeah,
they just say no.
I mean, that's why a lot of these big dogs like Elon Musk just are like, you know what? I'm out. It's regulations. It's red tape.
Yep.
So it makes sense.
I think like I didn't know that they're actually talking to the farmers and insurance people again. So that's good news to hear. So hopefully they come back.
Yeah, so California is really trying now. I think the situation's finally gotten desperate enough. So there's a newish regulation potentially being passed. It's not fully implemented yet, but it's called the California Sustainable Insurance Strategy. And that was essentially, the Department of Insurance's attempt to bargain with the insurance companies this one last time, where they've changed, some of the hard things for insurers in California. They couldn't use forward-looking modeling in developing their rates. They couldn't use their NCOR in developing their rates, which is their net cost of reinsurance. So the DOI has essentially come back now and said, hey, we'll let you use this forward-looking modeling. We'll let you use your net cost of reinsurance in your rate development, which would allow them to charge the higher rates that they need to charge to be profitable. But in exchange for doing that, you need to come back and write coverage in some of these higher risk areas. So those conversations are being had. Like I said, that hasn't been fully implemented yet, but it's at least, being discussed, and hopefully, the carriers are able to agree to it. I don't know, after this event, it will be much more difficult to, I think, bring carriers back into the state and get that capacity back again.
If the free market works like it should, there's plenty of
going to say the
competition.
same thing.
Like,
There's no free market. That's
I know. That's exactly I'm like, that's my point. It's like, I don't know. For me, I started with literally zero, and we've built like a nice little empire for ourselves. But we worked, we stressed, we took big risks. And so it's easy for us to kind of see it from this perspective. And I understand that's, everyone has different risk tolerances and goals, et cetera, and that's fine. But I don't know. From what I've seen, free market works pretty dang well. And when the government oversteps, it never works out. I mean, why did California decide to overstep in this field and cause all this, like,
Yeah. Yeah. I mean, I couldn't agree with you more. First of all, I made a post about this on social media. I think it was last week, where I made an example. I think a lot of people, when you start talking about insurance, they kind of check out and don't want to hear it. Right. So I made an example about eggs, and I said, hey, if there was an egg manufacturer and it was costing them, say, $3 per dozen eggs to produce their eggs, and they're selling them for $5 and everything's going well. But then their costs increase, and now it costs them $6, right? Feed costs went up, cost of chickens went up, whatever. Well, now they can't keep selling those eggs for $5 because now they're losing $1 on every carton of eggs that they sell, right? So they've got to increase their cost, let's say, or increase the cost price that they're selling it for. Let's say they increase it to, $9 a carton. Now they're still making that $3 a carton in profit. But if the state comes in and says, hey, in California, you can't raise your price. You still have to keep selling these for $3 or $4 a carton. If it's cost, or $5 a carton, sorry, if it's costing them $6 to produce, they can only keep selling eggs in California for so long before they start looking at other states and saying, hey, in all of these states, we're making a profit. California has this price fixing issue, so we're running a deficit. Any business owner will tell you, and people get mad at insurance companies, but at the end of the day, insurance is a for-profit business, right? They need to be turning a profit at some point or they can't continue to operate. I heard one statistic, it said State Farm was running overall at a $14 billion deficit in California before they finally pulled out. You just can't expect a for-profit company to keep doing that. Even if they're making money in other states, it's offsetting their total profit by so much. It's just not possible to keep operating in that way.
and for California just to step in like this, I'll leave it to the listeners to decide whether it's an overstep or not. But are they at least, and again, I know nothing about this, but are they at least like subsidizing some of like if it's like the egg analogy? So you can't go over $5, but we're going to give you $1 for every carton you sell. Is there anything like that?
Well, not really. And then what becomes worse is that with the FAIR plan, they essentially come in and say, okay, well, if you're not selling eggs anymore and you're not selling eggs, so people can't get eggs anymore, hey, we're going to start producing eggs and we'll charge you $10 a carton, to your point, right? Where you move things with FAIR plan and it costs even more. So if the government comes in and says, hey, you can't sell eggs for more than $5, but now there's this, gap in the market for eggs, we're going to come in and produce eggs, but we're going to sell them for 10, but these are the only eggs that people can get. That's kind of what happened with the FAIR plan. And a lot of that, not to get political, a lot of it ends up being a political issue where the commissioner is running on a platform that they don't want to hurt the little guy, which is the ultimate purchaser of insurance, right? And so the platform becomes, we don't want to increase your prices. These big bad insurance companies, we're going to keep your rates low. But when you keep the rates too low artificially for too long, we see the results of that, which is carriers have to pull out after they're running at a deficit for so long. So you ultimately end up hurting the end purchaser of insurance even more, because by taking away that capacity, you're almost forcing a hard market where they either have to raise their rates much more now. And, some of the figures I've heard are 3 or 4, 60 to 80% rate increases is what it would take for some of these carriers to come back into the state now, which would mean, overnight for them to start writing new policies, they need 3 to 4x what they were writing them at before, because they're trying to make up for 5 or 6 years now of rate increases that were never provided to them. So, it becomes a really messy situation.
What's weird is, let's say it is 4x, right? You can just let them be here and we just won't get it from them, right? We'll look around, right? Mm-hmm. So I don't understand which little guy is California helping. It's just dumb. Like if Drew's selling eggs for $8 and Sky is selling it for $6, Drew's out of business. I don't care what his cost is, whatever, like goodbye, right? So they could have, I don't know what they're trying to do, The thing, I want people to understand is what we're talking about is when you do a lot of these kind of like, price fixing, right? Basically, the government is telling people you cannot increase the price, but then they literally advertise, we will print money and decrease the value of your money every year. And it's like 50% inflation from 5-10 years ago.
And that's all to subsidize their policies.
Yes, the subsidizing policies
and their inefficiencies. Sorry, we're going off on that.
But I'm just saying,
it's all related though. It's all interconnected, and that's what a lot of people kind of fail to realize from the insurance part of the picture, is that it is a big part of the greater financial system, right? And a lot of these, people get mad at the insurance companies. Again, I know it's easy to villainize them and, oh, it's the big bad insurance companies. I get that. But ultimately, it's part of this bigger financial problem that we have as a country right now, in California for sure as a state. And insurance, is really the canary in the coal mine. Insurance is not causing the problems. Insurance is a big sign that the problems are already there.
Wow. I had no idea.
Yeah, so I think we've covered a lot of that. So I hope people listening can understand. Now, if someone is buying a property right now, what are the things that they need to know? For example, let's just say we don't have all these weird edge case scenario like the Palisades fire or anything, just buying a regular house, right? So how I do it is, as soon as I buy, I make sure it's in a landlord policy. Because if there's a renter falls down, if you have a homeowner's insurance, it's like primary residence, they're not going to cover you. They'll be like, yeah, goodbye, good luck, right? Luckily, we did that for Quincy. We had a lawsuit. Somebody fell down, right? And then they sued us for $500,000. They got $100,000. But we had the landlord policy, so we were covered. So if we didn't, then we would have to shell out $100,000 cash and pay for 2 years of lawyer fees, which would be another $100,000. We would have had to sell a property to.
Have we not had landlord insurance?
If I just didn't call them after close and said, hey, switch it to landlord policy right now and make sure all these people's name are on there, we'll be screwed.
What was the policy in place before?
I think it was a primary residence policy when we bought it because of the loan and stuff.
Yeah.
We were able to work remotely during COVID, so we were getting like primary residence, and we'll live there for a little bit. And then, but once we move out, you got to get the landlord policy, otherwise you're screwed.
Gotcha.
Actually, even if you live there, like my house, I live here, but I still have landlord policy because I have rentals.
Right.
Yeah.
Interesting.
Yeah. Is there something you want to tell the listeners about?
I was just going to say, from an insurance perspective, we would just call that a personal exposure versus a commercial exposure, right? So anytime you're leasing it to others, that's going to be a commercial exposure. You're renting it out to someone else. And then your personal policy is going to be your primary residence and then any secondary residences that you may have, as long as you're not leasing them out to others.
I see. So some policies will still cover it, even though you just have a primary residence on it?
No, it's typically even going to be two different agents, right? Or two different brokers that you're working with, because some people will specialize in personal lines, which is kind of, your personal auto, your personal homes, if you have any boats, planes, anything like that, that's owned in your name and that you're utilizing for yourself, maybe your family, versus commercial exposures, which is kind of those landlord policies that you're talking about. So anytime you're renting to others, leasing to others, any kind of business operation, you're going to want that on a commercial form versus a personal lines policy form.
Yeah, I actually just called my guy David, and he switches it over to landlord from primary residence. Yeah, there's nothing else changed. And then I can add when I put it in my LLCs. So the LLC is also a co-insured, and all the parties involved in like tenants in common and stuff like that. So then it's like everybody gets covered.
Yeah, that's critically important. Any special purpose entities that you have set up for these properties, you want to make sure that those are named insureds on your policies for sure.
Yeah, anything else, Drew?
I have a lot.
You look a little shell-shocked by the
No,
throw too much information at you on the insurance. 5
questions. I should have brought my notebook and a pen. I was going to, because we buzzed through like a bunch of stuff that I wanted to ask about. I'm just trying to think of something. Well, I'll tell you this. I definitely know that, as we grow our portfolio, it's probably just a matter of time before, oh, thanks, bro. This is perfect. Before, something happens. I mean, heck, our very first investment property ever, the Quincy debacle.
That's the property we got sued.
Yeah. So I know it's coming down the pike. What advice, just selfishly speaking, would you give to me and Vince in the next, say, 5 years, as we keep buying residential 4 units and under, and most likely eventually get into commercial, which is, maybe a 16 unit? Is that kind of what you do loan products for or consult on, or am I
Yeah, so majority of our exposures is going to be commercial, right? We'll get involved on personal stuff only if some of our owners have personal exposures that they need some help with, but personal lines is really not, my area of expertise or what my firm focuses on. It's mostly all commercial and all different asset classes. So it could be multifamily, industrial, retail.
So let's say we buy a 5 unit, which will be considered commercial. What happens now? What do we have to look into?
I mean, you're just going to go get commercial insurance. So I don't know, the guy you're working with, whether he's able to write those commercial policies for you as well. I don't know if it's like a State Farm or Farmer's agent, or if you're working with a broker who goes out to different. Yeah. So if he's going out to different carriers for you and getting quotes, he should still be able to do that on a commercial placement.
Yeah, we actually, what's her name? The one, Nasheen's friend, she's a broker.
Yeah. There's a couple of them now.
But anyway, that's this girl we know from our stuff. I've given her the addresses, right? It's been years. I'm like, go, give me the policy. She's like, that area. She's like, I know there's nothing there. That's why she's like not writing me one, because she can't. Nobody wants to insure. Turquoise.
Oh, really?
K1, your house is not insured.
Turquoise. Interesting.
No, we do have fair plan, whatever.
Fair plan.
I don't even think fair plan covers liability if a slide and fall from the. I know it's fire for sure. I don't know how much liability coverage we have. It's definitely not millions of dollars.
What's the like intake form look like for you? What's the questions that you have us as property owners answer? Is it like risk tolerance, property type, location, etc.?
Yeah, I mean, all of those things. If we're working with a potential new client, right? Those are all things I'm going to ask. What does the portfolio look like? I'm probably just going to ask to see a statement of values that has, all the locations, all the values they're currently insured for, what carriers they're with, and kind of what premiums you're paying now. And then oftentimes we'll come in, we'll do a program audit. So we'll look at all the placements currently placed, kind of give you recommendations as to things where you may be overinsured or double insured, things where you may have not enough insurance or we would recommend more. Any major exclusions that you should be aware of, because this is one of the biggest issues that I see is that people buy insurance, but not all insurance is created equal. So I'm sure you've heard stories of people who had some type of exclusion they didn't know they had a loss that they thought would be covered by insurance and it wasn't. And so that's essentially what we would call, something you thought was an insured risk becoming a balance sheet risk. And that's what we want to avoid. Not that you can never have total coverage, right? There's no such thing as fully insured. There's no such thing as coverage with no exclusion. So anytime someone says those words, hey, you're fully insured, I always tell people, push back on that, ask them what that means, because there are no policies that have no exclusions, right? There's always something excluded. So the most important thing is just making sure that whatever your risk appetite is and whatever your lenders require, right, that your policies are in compliance with that and that you're comfortable with whatever is excluded. If you have a loss, by one of those excluded perils, you're going to be picking that up out of pocket. So you kind of need to know what those things are so that you can prepare for them, and either, go with a different carrier, pay more for insurance, or just get comfortable with the fact that, you're taking on some of that risk in-house.
Gotcha. And what's a dream client for you and a nightmare client for you?
I would say, a dream client for us, for me to get involved, I'll say this. I always tell people, we're an additional fee. We work on a flat fee basis. We're in addition to your broker. So if everything is going smoothly, if you're super happy with your broker, you're staffed up, in terms of your internal insurance procurement risk management team, you're happy with your rates, you're happy with your placement, which, you don't meet many people these days who fall into that category. But if everything's going smoothly, you really don't need us, right? We're good at coming in and solving problems. We're kind of fixers. So if the rates have gone out of control, if you're not sure if the coverage is right, if you don't know how to pick a good broker, that's what I hear a lot from people is just, hey, I think we like our broker, but I don't know. Maybe my lender is giving me some pressure. Maybe my LPs are giving me some pressure. We've been with the same broker for X amount of years. We just don't know how to even validate if they're doing a good job or not. That's something we can do. Come in and go through a broker selection or RFP process with you. Internally, we're aggregating rates on a regular basis with, a lot of top commercial real estate insurance brokers across the US. So we're aggregating their data from their renewals to know which carriers they're with, what rates they're paying, et cetera, for their clients. So I can kind of take a quick look at things and know if it looks right or not. Whereas, the end purchaser of insurance, you guys as the property owners typically can't do that, right? You kind of know if it's in line with what you've paid in the past or not, but there's nowhere that you can go online real quick and see what all your peers are paying for insurance. It's kind of this opaque thing that's behind the curtain. So we try to kind of break that down for our clients and help with that.
Your business is really as like an insurance consultant / auditor. You kind of audit not only if there's holes in your insurance policy, but also are you overpaying or underpaying, et cetera. Right?
Yeah. And then as you get larger, as the portfolio builds and you get to a certain scale, there's a lot more that you can do with insurance, right? And it really becomes more of a puzzle where do you want to put a master placement together? Do you want to look at alternatives like maybe a renter's insurance captive or maybe a true captive? Can you handle a high deductible placement? Will the lenders allow that? So all of those things are kind of puzzle pieces that you can play with to control your insurance cost even more once you reach a certain scale.
Have you thought about investing in real estate and taking advantage of all of those benefits without any of the work? That is something that AnVi Invest not only provides, but has been providing since its inception. With friends and family, we have built an empire and a system of a wealth generating tool that is giving us and our friends and family that leverage in their life to create true wealth. Go to anviinvest.com for more to see if you qualify. And thanks for listening. And so just to make sure everyone knows, we all know how important insurance is. It's extremely important, especially as you scale. So definitely call Skylar. We're going to plug you in on the notes in the end. But I do want to shift over and selfishly kind of inquire. I am a business coach, entrepreneur. I have a new business idea every day and I have to kill it because I already have too much going on. I'm kind of curious as to your story, how you made that leap into now having your own entity for the past, what is it, a year? Did I hear that right?
Yeah, about that. So, I've always been one who wanted to do my own thing. I do the best for sure when I'm not necessarily being told what to do and when the buck kind of stops with me, right? So, thrive or fail, I'm responsible for it. I love that kind of pressure. I know some people hate it. And so I think I'm just kind of innately born to be a business owner, work for myself. I think some people have that personality and some don't. And so for me, it was more a matter of, I always knew I kind of wanted to do that, but it's tough when you're in a position like I was in where you're making good money, you have a very comfortable career, you got a family at home that you have to think about. And I always tell people, like, if it were just me, I probably would have taken this risk 10 years ago. And, if I end up homeless because everything fails, it's on me. But when you have kids at home, you can't really do that, right? You have to be a little bit more strategic with your timing and planning. So, I really kind of got the itch a couple of years ago where I started thinking it's probably time for me to go do my own thing. What does that look like? And to launch an independent insurance agency or brokerage, the barrier to entry is a little bit higher, especially, most of our clients are larger clients. And so it would be tough for me in good faith to tell them to leave, the national brokerage I was working for before, multinational brokerage I was working for before, and follow me to my little independent firm. It just doesn't work that way. But from a consulting perspective, the barrier to entry is much lower in terms of you don't have to get carrier appointments. You don't have to jump through all the same hoops in terms of regulation. It's pretty easy to just set up a firm and, immediately you can kind of work with clients of all sizes and it's just easier to do. So I started running, kind of the numbers on what that would need to look like for it to make sense for me to leave and do this. And, so far, knock on wood, we've surpassed any goals that I had laid out for us. And, things are, I think the demand was much higher than I had even anticipated, which just kind of goes to show how much pain people are having in that insurance space.
That's awesome. So did you see the demand first and make the leap, or you just kind of had it in your head?
Yeah, it was pretty clear that people needed help, right? And insurance consultants have always existed, but I kept getting the requests from my clients, specifically, real estate owners and developers that, hey, we want an insurance consultant who understands our core business and who can kind of help us with more than just a policy review, but is telling us things ahead of time. Like, hey, you need to update the aluminum wiring, which your broker should be telling you, but a lot weren't, right? Until those non-renewals started coming in. Your broker should have been telling you that 3 or 4 years before the non-renewal came in, right? But hey, here's all the underwriting factors that are going into your policy. Here are things you should look at updating. If you don't update this year, how many carriers are going to pull out before next year? And at what point are you going to have no available options? You're going to have to do those updates anyways. So now you've increased your OPEX by increasing your insurance spend for all these years. And now you're still going to have to do that CapEx anyway. So you're not really avoiding any of those updates. You're just putting it off. And then over, 3 to 5 years, you're paying even more because now you've paid for the increased insurance and you have to make the changes anyways once all the carriers pull out. So things like that, clients started to kind of get frustrated. And then what's happened in the hard market is more C-suite. We're getting a lot more C-suite attention on insurance now than we ever were before. Once you started seeing C-suite, like CEOs, CFOs, COOs are starting to really look at the insurance because it's become a real issue with increases now, right? but they don't necessarily want to handle the insurance, especially if that's not something they're used to handling. So that's another area where we can come in and help, is just kind of this outsourced risk management and insurance procurement process where we, work with their brokers, kind of hold the broker accountable through the process, change brokers if they need to. But because we have rates, this kind of aggregated database of rates, we can hold the brokers more accountable and help negotiate those premiums better than the client can typically do for themselves.
Nice. And so you've been crushing it for a year, and for the next year and year after that, do you think you'll have plenty of business, plenty of, referrals, or is there a strategy in mind to maybe market outside? Because for me, when I consult business owners, it usually is somebody who has got a skill or two, is very good at delivering a product or service of some sort, or at least know that they can, but usually is completely clueless with everything else, namely the marketing aspect.
Sure. So, I'm a salesperson by background, right? I will say so far to date, everything has been inbound or referrals. We haven't done any outreach. I do my social media stuff, so that's, technically marketing. We've certainly done some business that way, but in terms of, any paid marketing or anything like that, we just haven't needed to yet. And we've been growing way faster than I ever anticipated. Yeah. So I know that won't last forever. But right now, my challenge, frankly, has been more controlling the pace of growth so that it's sustainable and making sure that I'm looking at hires and things ahead of how fast we're growing versus trying to go faster, because we've just been growing so much faster than I ever expected. It's been a little tough to keep up with. But yeah, it's all the right kinds of problems, right?
Yeah. And it's probably because you were in the game for nearly 2 decades building relationships. Am I wrong?
Oh, yeah. Without my network, this wouldn't have, I think the business model still would have worked because I think it was needed. And there was definitely a hole in our industry where, someone needed to come in and fill it. But I think it would have taken a lot longer to get the kind of traction that we've gotten.
And you probably have a little overhead. I'm guessing you don't even need an actual office. Am I wrong? Or
there's hardly any overhead.
That's
I think
the way. Yeah. That's very unsexy to be like, oh, I just work from wherever. I don't have an office. But like, guys, anyone listening, if you can have zero overhead, like go, like you have, what are you doing?
Yeah. People don't care. Our clients typically want us in their offices because we're digging through their filing cabinets. That there may be a handful of times a year where I need to meet with someone in an office and I have office space I can use. I have a lot of friends who have buildings and offices in Orange County. Luckily, maybe after a few full-time hires, I would consider it, but I also don't think that this is a business, we could potentially just be fully remote forever. And I think that would still work.
Yep. 100%.
Are you local?
Yeah.
Oh, cool.
Yeah. I actually met Sky through Christian. I went to one of his events. It's over in Newport I forgot what it was. You were one of the speakers.
Mm-hmm.
What was that event called? I forget.
Something commercial real estate. I think it was focused on like Southern California commercial real estate. Something.
Well, you should come to a meetup on Thursday. We'll introduce you to Tom. He does the commercial stuff.
Yep.
Orange County is a big
dog.
Yeah.
Tom might be a good, not only resource, but he might actually need your services. I'd be surprised if he doesn't.
Okay.
He's
awesome.
a broker. He runs the Costa Mesa Keller Williams office. That's where our meetup is.
Yeah.
On Baker.
Tom, we're calling you out. Better see you on Thursday. Although this will probably come out well after all that.
Yeah.
But point is, And by the way, if anyone's listening, we do a local meetup in Orange County. I think we're going to shift it to every third Wednesday. But anyways.
Yeah, we'll talk to James.
Yeah, we'll put it in the liner notes. But we're very active and it's been building and it's been great. We've been really helping people to get advice and, getting pointed in the right direction. We're all about just getting started, getting some real estate because how we were talking earlier about, they just keep printing money and inflation, and that's just a never-ending tax that will just always continue. And the weird part about that is we benefit from that as owners of nearly $11 million of real estate right now as we speak. And so we actually benefit when it goes up, and that's where I'm so passionate about it. It's like this game is the way. These are the rules. That's never going to change. They're going to keep printing money. So you might as well get on this side of the fence. That's why I yell at all my friends and peers who don't own anything yet. And I wanted to ask you and put you under the microscope. I think you bought and then sold some real estate. Do you own anything besides your business, or are you all good?
Yeah, so I went through, in terms of timing of my life, it was the right time. In terms of the real estate market, it was the worst time. So I had 3 or 4 homes out in DFW that when I moved back from Dallas, I sold all of those investment properties before I moved back to California because I was frankly just divesting of responsibility in my life at that point. Um, and I am pained because I still get the emails from Zillow for all of
Right.
them, and they've
Your home
all
values.
gone up
Yeah.
about 55% since I sold. I mean, I still, made a little bit of money on them. It's not like I lost money, but could have made a lot more money if I held on to them for a few more years. But, at that point in life, I just had so many different plates in the air, and I did not want to be a landlord from out of state. It just wasn't a commitment I was ready to make. So I made some changes in, how I was investing at that point and pulled out of the real estate space. But,
No, I get you because it's a lot. Like I forget that end of it. Like it is a job. Even if you have property management, like you've got to babysit them, you've got to audit them, figure out what's going on. It is a job. It is something that will be a time suck no matter what. It just is what it is. It's a little bit more, money is trapped in the walls kind of a thing as well. So very illiquid. So there's always its own, pros and cons. For us though, because of the asset class, we basically looked at everything. Like here's how all this, and we own stocks, we own other things. I own another business as well. But yeah, by far, like you can't even come close to what real estate does, which is why we're just like psychos about it. Especially the leverage aspect of taking. I mean, I literally took 20 grand cash. I had it in cash in a safe because I'm a psycho and was a waiter, and dumped it into my checking account. The bank was like, what kind of drugs are you dealing? I have the hair. I get it. I have a certain image, although I never do drugs. I've never done drugs. But the point is they were like, not yet. Next year when we're
there's always time.
There's always time.
We don't have
they were like freaking out and they pulled me aside and they were like, hey, sir, can we have a meeting with you about opening up a line or something? But yeah, we took all that and dumped it in our first property. Glad I did it. It was super scary, super high risk. But, we invested in real estate where it was appreciating. So, but man, grueling hours. So I get it. Like it's a lot more work than I ever wanted to sign up for, to the point where we've thought about it. We're like, yeah, if we knew like what we were going to have to experience, will we do it again? I'm like, maybe,
It's definitely not passive. You always hear the people on Instagram saying real estate is passive. And I think that's definitely, a misnomer. So
yeah, I would say though, we started off like you, we still have some long-term rentals, and then we have midterm and short-term as well. Compared to the midterm and short-term, dude, our long-term, we hardly even notice.
Yeah,
it.
that's
that is good.
Yeah,
so,
comparatively.
Because, like our goalpost has changed. Before, I have a regular job too. So I'm full-time working. He's got a business and we have to manage it. We were like, oh my God, this long-term stuff is, a lot of hassle. And then we start buying short-term, midterm, and then short-term. And we were like, wait a minute, this long-term is actually pretty good.
Yeah.
Compared to that.
It's so much more active. I was telling him, we've had quite a journey. I remember just getting burned out at one point.
And he moved to Mexico for 2 months.
I literally just went to Mexico for 5 weeks back this time last year.
Like, hey,
literally,
you're not helping your argument that you're not a drug dealer over here. Okay,
I know, right?
None of this is looking good.
Yeah,
I think it has to be the opposite, right? You wouldn't want to smuggle the drugs from Mexico.
It'd
be cheaper to make it there.
That's what I've been doing But yeah, I burned out so bad. I needed like a whole regroup, and I really checked out. Glad I did, but point is it's a lot, if you're going to be an Airbnb, that's going to be, welcome to 24-hour guest experience. Like you have to be on, and it's just really hard to be on. Luckily we have, people who help with managing that. I get to manage my team. Point is it is a lot. So I also have to remember that if you guys want to get involved in real estate, there's so much to it. Insurance is just one of like the 20 levers that you have to make sure you pull in that process of due diligence and of understanding where you're even going to, purchase. I think that's one thing that kicked us out of Florida was looking at the insurance. We're like, oh, never mind.
Yep. A lot of people are having that conversation now for sure in Florida.
Anyways. So
yeah, cool. Sky, so if you had one question to ask us, let me flip this on you. To get into investing this year, what would you want to know?
What are you guys planning to do? Are you planning to diversify your portfolio in terms of everything is residential right now, right? Do you ever look at other asset classes or other geographies, or are you pretty much sticking with what you know?
Yeah, we have a very, very 2% ownership of like a 44 unit in Lakeland, Florida. It's not doing very hot. It's like, it's whatever, it's a C. I'm not too pumped about it, but it's fine. I think we'll probably return 8% for the investors, whatever. But yeah, I like to stick with, within the single family itself, we do have the diversity of short-term, mid-term, and, furnished rental versus unfurnished. I'm like thinking of going back to unfurnished because I just don't
Same.
have time. Like it's just too much, So I might go back to that. We did it reverse. We did like multifamily, and then we said nah. So the last 2 years we only bought single families.
Yeah.
So it's kind of funny. So we never bought single families for the first 5 years.
Part of that though was because of so there's this big like sweet cherry on top of the sundae of what it is that we do with furnished rentals, and that is getting an insurance contract. So back to kind of that insurance world. It's unsexy, but it is actually the sexiest way for us to make money and to help others in need. So somebody had their house, like the roof blew off, whatever, in a storm. This is a true story. And they booked with us for months. Big contract, nice generous check. It was awesome. It was a win-win. Procuring those is a whole different game and a whole different thing. But yeah, that was why. And I remember driving my butt out to our duplex in here in Placentia, over in the place that we have in Santa Ana, which is kind of more of a triplex-ish thing on one lot. Point is, I noticed that people who are paying premiums didn't want that. They wanted a nice big home. And so that's kind of the direction we've been going in. It doesn't hurt that it's also, it appreciates better typically. Been, I would say, this is totally anecdotal, but probably overall better clientele.
I would say so, yeah, because
but,
people who come there usually have families, pets, kids,
Right.
and they want to stay for a little bit longer.
Yeah.
Less turnover.
So, yeah.
But back to you. What was your question? You didn't ask us a question. You tried to scam us. We're talking.
I did.
She's
What?
like, what's your plan? What are you trying to do?
What's your plan? What are you doing? That was the question.
No, but it has to be related to you. Like you would have, like what can you ask me that'll make you invest by yourself? That's my question.
Oh, I don't know. I'm still in offloading responsibility place in life. So I'm not looking to pick up any new investments this second. No, I have 2 youngish kids and a very young business, and I'm working on my second book right now. So that's kind of, my plate is full.
What's your first book? What is it called?
My first book is called So She Did, Stories, Stats, and Strategies to Help Women Win. So it's, I interviewed about 50 female business owners, mostly in the real estate, construction and insurance industries, business owners or leaders in business. It's kind of about their experience, and then weaved in some statistics and advice on how to help young women come up in their careers.
That sounds awfully a lot like our friend Ashley Kerr, who also wrote a similar book. Do you know her? She's a multi-family genius.
Oh, no, I should meet her.
Yeah, she's super cool. She's been on our podcast.
Awesome.
Yeah, that's awesome. So you went out, interviewed 50 different people, successful business owners that are female. That's awesome.
Yeah, kind of tapped my network. So they're from all across the country. So it was a really cool experience.
That's cool. Specifically more like real estate and or insurance related businesses.
Mostly real estate, construction, and insurance. A couple of insurance. It was mostly real estate and construction, just because that's kind of where my network lies. So it was the easiest people to pull together.
Yeah, the book I was talking about, you should read it. It's pretty cool. I've read a portion of it. It's called The Only Women in the Room.
Okay. I love it. I'll add it to the list.
It's literally, it's the same as yours. It says knowledge and inspiration from 20 women real estate investors.
Oh, really?
Oh, that's funny.
Hey, she did 50, so eat your heart out.
Well, I think about 30 made it actually into the book. So,
oh, really? Okay.
Sounds like we wrote pretty similar books. Yeah, I would love to meet with her if you want to make an introduction. Sounds like we've kind of had a similar journey there.
Her husband is a professional hockey player, I think for Canada, and he helps with the investments, but he always introduces himself as husband of Ashley Wilson.
Oh, nice. I love that.
Yeah, that's awesome. Yeah, we'll have to plug your book in the liner notes as well. So maybe email us as well if you would after this, just like anything that you have links wise that you'd like in the liner notes. But that's awesome.
Okay, for sure.
We're currently talking about writing a book, but we've got no further than that.
Yeah,
Because our journey's just been so...
We'll talk to her first.
I was going to say, I learned a lot of things through trial and error in that process. So if you guys ever really do commit to it and you're ready to go, reach out to me because I can help you save a lot of the learning the hard way that I did.
And what would be your biggest piece of advice about writing a book?
You know, there's a lot. There's a lot in terms of just timing, the steps you have to go through, when to file for ISBN numbers, you know, deciding if you're going to have hardcover, softcover, all of those things matter in terms of the sales that you're going to get. So like one of my biggest mistakes was releasing a hardcover and a softcover. So they're essentially competing against each other for, you know, any bestseller list. So it's much more difficult to make. So like, you know, at one point, I think one of them was like number 30 something and one of them was number 40 something. Well, if I had just released one, it probably could have made it to the top 10, right?
Sure.
But you're competing against each other. So things like that. And then if you work with a consultant, you know, they'll kind of give you tips, you know, what day to release it, you know, for Amazon, which kind of, you know, keywords to use or all those kinds of things. You know, some of their advice I went with, some of it I didn't, and probably could have done a little bit better. Formatting and things like that, just give yourself a ton of time. I learned to outsource a lot of it. So I had someone else create the cover for me, do a lot of the formatting, all of that. And just know that when you get it printed, especially the Amazon copies, it doesn't always look exactly the same as the formatting that you design. So just kind of be ready for that. I've seen people who ordered copies, you know, different copies kind of come out printed a little bit differently. So there are certain colors and things that you can choose where if there's, you know, some variation in the printing, it won't be as significant, which I hadn't realized. So I had like a light pink cover and some of them are printed like almost white. Some look like way too almost Barbie pink. But you know, if you choose different colors and there's not as much variation, they won't come out as different. So just, you know, a bunch of random things like that you don't know until you go through it once, right?
Yeah, noted. And what's the new book? I mean, if you can give us a little preview.
Yeah. So the second book, I mean, it is in the very, very, very new stages, but it'll be about personal branding and how to build a business kind of on the back of social media.
Love it. Yeah, you're super active on social media. I've definitely like seeing your stuff. Like, I really wish I was like as active as you, but I'm not even close. Like we're trying to level up. Like we've got a lot of testimonials I've been trying to post, but I mean, on top of the other things that we're doing, do you use somebody? You have like a VA that helps you with that, or is that all you?
I don't. You know, in terms of return on time, it would probably be the best thing for me to outsource because I spend so much time on Twitter, especially.
It takes a lot of time, yeah.
But it really does take a lot of time. But I think, you know, part of the reason that I've been so successful on social media is because it is my authentic voice. And so I think if I outsource that, I just would not have the same results. And right now, about 70% of our revenue is coming from social media, just inbound leads. So I don't want to do anything to mess with that. I think it's worth the time that I'm spending on it right now.
And is that on just based on your personal one that I follow, or is there like another company one?
Yeah, I mean, I have like a company LinkedIn. I think there's a company Instagram, but I don't post much there. It's mostly just me being ridiculous online.
I feel like, you know, people want. They want like to like, you know, purchase from a person, not just some faceless building or whatever. So yeah, that's
what I've noticed too.
There's a teachable moment in there. You know, people want to see faces. People want to see personality and quirks and likability. It all matters. And
like, I'll make a quick example. Do you follow Cardone Capital?
No, I do not.
Do you follow Grant Cardone?
Of course.
Then game over.
Yeah,
there.
exactly.
That's it.
Yep. Yeah, you're
Nobody
right.
knows about that, right?
Yeah.
So you follow. Cool.
Yep.
Nobody
That's
follows.
the power of a personal brand right there.
Yeah.
There you go. Yeah.
That's exactly it. People,
What's
and then
sorry, go for it.
the client acquisition time is so much shorter too, because people follow you for a while and they feel like they already know you and trust you. So it just makes the whole process so much more seamless. It's really crazy, actually.
We've been experiencing that with the podcast. We'll do meetups.
Mm-hmm.
I literally do this. We've been doing this for years and I forget that we do this somehow. I just got so much going on. We'll do the meetups and people will ask me about a very detailed thing. And I'm like, that's some investment thing that's going on in our life. And I get like kind of like mad for a second. Like, how do you know that? Like there's this like paranoid part of my brain. Like, what? Who are you talking to?
Yeah.
Like, yeah, the podcast episode with the guy. I'm like, oh, that's right. I just give it all online to this podcast.
Yeah.
But it's actually really helped us to procure clients for coaching. It builds trust, builds knowledge. They can see like when Vince starts talking about CapEx. They're like, all right, you know what? Head spinning. I'll just hire him. Same thing for you probably when you start getting into the deeper like weeds of insurance, especially the vernacular. I feel like it's its own language, like everything else. I'm sure people are like, oh, where do I sign? How much do I owe you?
Yep. A lot of people just don't want to deal with it.
Yeah. I'm one of those people.
So. What's your IG before we let you go?
I don't really use Instagram that much. It's just my name, Skylar Romines, first name, last name. But compared
How do you spell the last name?
I'm sorry?
How do you spell the last name for people listening?
Romines. Not super active on there, though. It's mostly LinkedIn and Twitter. Twitter has been the big one that I never expected. But
yeah, even in the panel, you were mentioning that. I think someone asked you about that. And you're like, Twitter.
It's crazy. Yeah, I never expected
a lot of your Instagram, because I don't follow you I don't really do Twitter, but a lot of your Instagram is just like, I noticed reposts on like from your Twitter. So it's interesting.
Yeah, I'll just screenshot the Twitter and then put it in like the Instagram stories or whatever. But yeah, I mean, Twitter has really kind of changed my life just in terms of people I've met, clients that have come in. There's a corner of Twitter called Retweet, which is real estate Twitter. And some of the connections I've made there have just been invaluable. So, I was the biggest hesitator on signing onto Twitter. A lot of people told me to do it for a long time, and I finally decided to try it and wish I had done it a lot sooner. But yeah, I mean, I'll definitely eat crow on that one. It ended up being so much more beneficial than I ever could have imagined.
That's awesome. And what advice would you give someone like us if we were say going to get on Twitter or someone listening? Is it like once a day, 10 times a day, like Gary Vee would say, or what?
Yeah. So one of the best pieces of advice I've gotten is try to shoot for 70% value, 30% viral. And the way that you can kind of break that down is, especially when I first joined Twitter, all I talked about was insurance. And I wasn't gaining followers as quickly, but I was still gaining followers pretty regularly. And then, as I got more comfortable there, maybe too comfortable sometimes, started showing my personality more and more. So that goes back to that personal branding aspect where you don't just want to be the insurance account. You want people to feel like they know you and also remember that you're the insurance person. And that kind of builds that more natural networking arc where, you're not just talking about insurance all the time because nobody really wants to hear that, but they know that you know a lot about insurance and you're sharing useful tips. And then they also start to feel like they know you a little bit because you're sharing, and the other thing I tell everyone, though, is you don't have to share everything about your personal life. I never share anything about my family. I never share pictures inside of my home. I have some very strict rules that I follow on social media because I think there are certain things that you should keep private. But you can do that while still sharing enough about yourself and who you are as a person that people feel like they kind of get to know you, right? So I'll talk about insurance, aliens, raccoons, pizza. There are a few topics that I kind of try to stick to, and then people start to kind of associate you with those topics, which is interesting.
Okay, that's cool. So the things you love, you kind of
Yeah, pick a handful of topics, right? And one can be whatever your business is, and then the other few can be things that are kind of unique or interesting about you. That is
really cool. That is great advice. I mean, that makes sense. Because we all have our little quirks and things, and it's kind of endearing when you find out somebody you're like a friend that you just made. Or I was out actually with a girl who I was already pretty attracted to, but she mentioned some quirks where she was really into sharks.
Okay,
and I was like, that's super weird, but that's really. She's like a little tattoo, even like a little cute shark. All right, that's a first, and it kind of makes you almost more bonded to that because okay, I have my weird stuff that I really like,
Mm-hmm.
So that's pretty cool. That makes a lot of sense to create that humanity aspect. But by the way, I also am super knowledgeable with insurance.
Right.
I love that. Wow. Okay,
that's cool.
Yeah. Anyways, I feel like we should wrap. We've held you hostage long enough. Thank you, by the way, for joining us. Really, absolute pleasure.
Yeah, thanks for having me.
And hopefully we'll see you on Thursday at the meetup. I'll send you some information on that. Vince, any last thoughts?
No, that's it. Nice meeting you.
All right,
Very
you
cool.
too.
And
thanks,
lastly,
guys.
they can find you, Skylar Romines.
On LinkedIn and X.
Yep.
Just search up that name.
Just by my name. Yep. And I think I'm the only one. So I think there's one younger girl on TikTok who has my same name. That's not me. But if you go to LinkedIn or Twitter, I think I'm the only one.
Awesome.
Okay.
Very cool. Thank you so much. And we'll see you hopefully Thursday.
Sounds good. Thanks, guys.
Thank you.
I don't know about you, but I definitely like to see
5-star reviews on any service or any product before I purchase. Please take a second to leave us a 5-star review, whether you're listening to it on Apple, iTunes, or Spotify, or whatever platform. Take a second, goes a long way, helps us a lot to grow the channel, and thanks for listening.